All right, guys, back to work. Another great day comes to an end. Hope you guys made some money in that big breakout. But it's back to work tonight, Tuesday evening. We're getting ready for Wednesday's trading session. We got a lot we're going to cover in tonight's video. Got some nice big moves on the charts today. We get some great trades I'm tracking for Wednesday. You know me, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, as always, make sure you subscribe so you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor, will you hit that like button? I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Let's get ready for Wednesday. Wednesday is not going to trade itself. Got some nice trades setting up for Hump Day, kind of wacky Wednesday tomorrow. We had some really nice big moves today, right? Lots of bullishness across the S&P and the Nasdaq right now. Bull breakouts after the earnings reports all came out pretty darn well this morning. Buyers, for the most part, never got a real big, deep pullback, and now we're starting to get some pullbacks right now, right? The Nasdaq, of course, with that really sharp pullback. So we've got some great levels down here to buy pullbacks right now. Pullbacks are definitely on our radar right now. But one thing you'll notice, especially here on the Nasdaq, is the strength of that move lower and what could possibly be a very strong continuation here on the S&P. It's definitely possible these bears, they may come in and hold this for a reversal. So we'll definitely talk about if the pullbacks fail or if the bears are too strong on this right now. Again, looking to buy some pullbacks right now, some key levels, but we will definitely make sure ready for a possible reversal because we've got some big news tomorrow. We got more earnings tomorrow. You got to be prepared for pretty much everything in these wild markets. So we're going to cover both sides. Not to worry, you guys have a game plan to make money in both directions here by the end of this video here tonight. Oil is, we get some big energy names coming on Friday. Of course, got an election where they're playing with the petroleum reserve in the U.S. right now. So oil's all chopped up in a big range right now. Buyers have a lot of strength going higher, but until we can clear this big weekly range, it's tough to trust breakouts right now. We'll talk about some breakouts, but the game plan for tomorrow is buy low, sell high, fade those breakouts, and trade that rotation. We'll talk about the game plan for oil, don't you worry. Now, tomorrow, Wednesday, not your average Wednesday. This is not going to be your average week overall. As I mentioned in last night's video, we are going to the end of the month. So end of the month is notorious for having some more volatility, right? So we do expect there to be an uptick in volatility here the later we get here this week. We got one more day next week, which is, of course, the 31st on Monday, but pretty much the last full week of the month. So volatility is expected to increase. The big news for tomorrow, we got some small stuff at 8:30. The big news tomorrow, though, is definitely that new home sales number. Everybody's been talking about this big crash, this big recession. Well, I'll tell you, it's tough to take the recessionary predictions very seriously until we start seeing the housing market start to tumble. We have yet to see any real big cracks in the housing market. Yeah, retail sales, that's fine. But the housing market, once the housing stuff starts slowing down, that's generally that first kind of domino that leads to those big recessionary drops. So that's definitely going to be something on my radar for tomorrow. As I always remind you guys, we see some of the best trades in our trade room after 10 o'clock Eastern time. So you definitely don't want to miss that catalyst. We do have the oil report tomorrow at 10:30, but again, with some big energy names coming later this week, I don't think that will have that big of an impact. We'll obviously keep it on our radar. We'll keep our eyes on it. And again, this should come as no surprise. We continue to watch earnings. This morning we heard from very positive earnings, right? With Alphabet missed the earnings this afternoon, but so far it's been all good news, right? So far, no signs of any real significant cracks in the earnings right now. Markets definitely felt a bit jittery this morning, didn't they? Before the opening bell. We got big names tomorrow, right? Boeing, Waste Management. Those, of course, are going to be S&P stocks. And, of course, we got Meta, Facebook, Ford, Teladoc. You'll definitely recognize some of those names for tomorrow. So remember, in the pre-market right now, be careful in the pre-market. Be careful in the last hour of trading right now. You saw how wild the Nasdaq and the S&P got this afternoon as they went into the close because we have, again, remember, we have some of the biggest, we're going to get, 60, 70% 90% of the entire universe reporting this week, right? So big earnings reports. So be careful early and late in the day. And again, don't miss that 10 o'clock new home sales tomorrow. Now remember, the news is noise, right? These are catalysts. The money is made by trading off the charts. So back to our charts here. We'll obviously have a front row seat tomorrow for those earnings reports tomorrow in our trade room. Now, I'm going to cover all my favorite trades on each of these charts here tonight. Make sure you watch this video all the way to the end, guys, because you will learn different trade ideas, different setup tactics, different advanced strategies as you go deeper into this video. And you know me, I try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. So grab some notes, take some screenshots. Got any questions? Drop me some questions in the comment section below. Let's begin first here on the E-mini or the micro S&P or the SPY right now. A couple things. First of all, this is a 10,000 tick chart. These are all tick charts here tonight. You can always see tick charts in the upper left-hand corner. Also be aware too, the S&P and the Nasdaq they're relatively similar. You're going to see some pretty big differences. A lot of that is because of earnings this week. But generally speaking, the S&P and the Nasdaq are pretty similar. So they're very much interchangeable. Usually, these might be a little bit different tonight though. You'll see how these are. You'll see right away the Nasdaq and the S&P do diverge from themselves this week or today. And so we'll do our best not to repeat myself as we go back and forth on these charts here. Starting off though, there are three key insights right now. One is a big bull bias. Look at a 4-hour chart right now. You'll see a bull bias as the price rotated strongly off that big range. Bull bias, what does a bull bias mean? It tells me that, buying pullbacks, trading reversals, right, off lows, trading breakouts. We definitely would like to be a buyer on this. Now, like I mentioned earlier, the sellers might get their hooks in this thing, so we definitely will be keeping an eye on some short setups. The second key insight right now is a big one. It's not just because it's a big move higher. That big move higher, that's a big move today, right? And anytime we see a really big move without any real deep pullbacks, what does that tell you? You got to think there's a lot of buyers right now who are hungry, right? They're trying to find a way to get in right now. And so we definitely think that anytime we see a big move in one direction, the following day is oftentimes going to either be a deep pullback or oftentimes it'll start to go sideways in a range, right? So, think about it. We see a big move in one direction. People may not want to sell just yet because we got more earnings, got a range magnet overhead here. If we don't get that deep pullback, it'll go into a range, and then we'll start thinking about that pullback later on in the session. So I always tell my students in my trade room, anytime we see a big move in one direction without any meaningful pullbacks, expect a relatively deep pullback. And the easiest way to make money on this is to simply trap in some of the bears, right? Think about the bears getting caught, thinking this is a reversal, and then use those stops, right, to go back up and retest the high. That's the first thing I think of whenever I see a really big move without any significant pullbacks along the way. And as you can see, I've got some really nice levels of support here. Next one, third one, is a spike in channel. A spike in what? Yeah, spike in channel. Spike up, right, into a nice tight channel. Now, why would that be important? Well, historically speaking, anytime we see a spike in channel, we always think about the base of that channel, right? Like draw a line or the bottom of that channel right where it runs into that spike. Oftentimes, we're talking about deep pullbacks, right? Oftentimes, that is where the deep pullback is the juiciest, right? And so that's, of course, where we look for those entries on that pullback, right? And you can see what also I do on these. I'll draw that trailing off the high. I'll bring it off that low. And you can see there's a lot of support down there that we have here right now. So, what is the most likely scenario in a situation like this? The most likely scenario is with that big move is a deep pullback and a retest of that high. Now, we'll talk about this more on the Nasdaq, but it's not difficult to think that deep pullback might become too deep, right? It just might become too deep, and all of a sudden now the bears are taking control, and we're now looking for that short back down, right? So that's why I said earlier, sometimes these deep pullbacks, and again, this is not your average week, it's an earnings week, which means a lot of variables that could easily change these things quickly here. So let's talk about how to make some money in the pullback, right? That's the kind of the most likely scenario in this situation. And then we'll talk about some reversals. We'll talk about ranges as we go deeper into this video. Now, you'll notice right now, we're not nearly as strong of a pullback right now as the NASDAQ is. Oftentimes what happens is when the NASDAQ, for example, oftentimes when the NASDAQ is at, and this could be vice versa too, this is interchangeable, if one market like the NASDAQ is at a major support level, which they are right now, oftentimes the S&P, right, the counterpart of the NASDAQ, will almost have support almost like empathetically, right? It's almost like support on the NASDAQ can be used, right, almost like a support on the S&P. So even though I'd like to get a deeper pullback right now, I think a shallow pullback should be on our radar. The problem with shallow pullbacks is that it doesn't help us buy low. And so when you're trying to be a buyer right now, trying to go back up to retest the high, the best way that I know how to buy a shallow pullback is well, again, I want to buy as low as possible. And the best way to do that is with what I call a trap. Now, what you want to look for is you want to look for the bears to try a couple times, right? Let the bears try to sell short a couple times. And then once it sneaks back underneath one of these prior swing lows, that nice strong signal candle, right? We talked about this last night in the opposite direction, of course, right? This, of course, is a bear trap. The objective is to go back and retest that high. Notice how I draw this, right? One try for the bears, higher high in price, two try for the bears, that trap low, shallow pullback traps. Now, the next one would be if we kind of get what I hope we get, right? What I hope we get here is I hope we can get down into the support area now. I hope we can trap in some of the bears. And what we talk about in our trade room always is the wider the channel, right? The wider the channel, the deeper the pullback, the more the bears are going to get momentum, right? The more momentum will build for the bears. So we have to expect on a deep pullback, even though I want to be a buyer right now, like I said, there's a good chance these bears may come in and give this a good shove going lower. Let them try a couple times, right? Let them try once, let them try twice. Think about now where their stops are. Okay, and we're going to use those stops as basically as fuel, right, for that run going higher, back up to retest that high, right? So we call these two try failures. We see a lot of these in our trade room. You guys see I have a lot of examples of these trade setups in our free trading course, right? Which I know most of you guys have taken to this point. Now, one thing about these two try failures is as they fail, right? As those bears fail, because there's so many bears that are caught short, that squeeze going higher can oftentimes be really strong. And you can oftentimes grab another little trap because, again, you don't want to buy too high, and traps allow us to buy nice and low. So as we pull back now, right, think about trapping in the bears, use their stops as fuel. And then as it punches higher, we know where the market wants to go. It wants to go back up to retest the high. So think about grabbing that trap as well, right? You know, that trap low, that bear trap ahead of a retest of that high there. I like that pullback as well. I would also think too, let's say, for example, the market kind of pushes lower here overnight. Let's say the bears come in and they double bottom. If we see a double bottom on this, that's really, to be honest with you, it's even better. It's even better because now the bears will have retested their low. And whenever I get a double bottom on these, I always start thinking about this sequence, right? I think about, okay, same thing, trapping the bears, right? Think about it, right? The smart money is selling high, right? The kind of the dumb money, right? The inexperienced traders, they're selling low, right? Technically speaking, relatively speaking. Once those bears get short, we know the stops are, and we can use the same entry pattern, right? Same entry pattern now, and look for that pop going higher. Now, oftentimes after that double bottom, you can find a beautiful channel off of that low, and or should I say off the high, and then pin that channel off of the low. And then I like to look left and find those prior swings and get underneath one of those prior swings. As I talk about in the free course, in the free trading course, I love traps. This could be a seller failure. It could be a pullback combination, right? All the same entry tactics that you guys are learning in our free trading course, which again reminds me, I know that most of you guys are watching right now. You've taken the free course. You learned all the entry setups. I love getting so many comments and emails every day about making money with those. But if you're here for the first time tonight, if you haven't taken the free class yet and learned all these entry tactics, what I'll do is I'll put a link up there for you in the upper right hand corner. Grab that link, join or take the free trading course, because I'll tell you, the strategy that I teach in that free course will make it remarkably easy to know where the best winners are. You'll be amazed how simple it can be. It'll make it easy to know where the losses are going to be, right? And most importantly, it'll give you a roadmap to follow, which for me gives me a lot more confidence, right? Having a roadmap to follow. It is perfect for somebody. That free course is perfect for someone trying to make the jump into full-time trading. If you're taking too many losses right now, if you're sick of missing the best trades each day, grab that free course and let me know how you do with it. I always appreciate the feedback. You guys are always so inspiring. All off the free stuff on our website. So definitely grab it and learn it. Now, obviously, the next question now is, right, the next big question now is what happens if we keep going lower, right? So the pullback, again, what's likely right now is that pullback and a retest of that high here. What would a reversal look like? How would this thing look like a reversal? The two most likely scenarios for a reversal, and obviously we'll have to wait and see what we get tomorrow. The two most likely are going to be is that we take out that low, the bears come in and they give it a couple tries and they're successful, right? And they get a really strong move down. Now, remember, when you have this much momentum, we're not talking about like a little double bottom here, okay? That's not what we want here. Remember, if it double bottoms, it's even better, because now we can go in and trap in the weekends and buy it back up from there. So a double bottom is not going to work. Even a little tiny break below it is not going to work, right? That still might break below it. We still might get that 1, 2, and back up again. Okay, they really need to pull back to that moving average, and they need to give it a good, strong run lower. We need a very strong run, because that's going to turn that momentum over for the bears. And we have that big range where we basically came out of yesterday, right? That big range down there. You get the prior week close, right? 37.85. Nasdaq has something similar as well. So if they can take out some of these lows here, if they can pull back, and rather than failing, if they can actually hold that breakout, and again, the real key is the strength of that breakout going lower. Once that's done, now we know we have a trend reversal. Again, be very careful with the double bottom here. You want to see a very strong breakout going lower. Mark that low. That gives us now a hidden channel. And like I mentioned before, I like to go out and look for prior swings, because that's generally where the best entries are going to be. Now, sometimes we've been able to have a prior swing there. I want to get above the moving average. This is the 21 moving average I'm kind of illustrating here right now. Traps above prior swings. Buyers might come in and try to buy it. Remember, if there's enough strength going lower, they're going to want to retest that low. So let those buyers come in, trap them in, and we can sell into those stop losses. An easy way to find a good target down here is to think about the size of the first leg and the size of the third leg. Okay, trend reversals, they love to give first leg, third leg, first leg, third leg. So think about that to really fine tune the exit as we go lower. That's definitely one way this market may reverse. Another way is it may just simply V-top, right? Who knows? The Nasdaq made a very strong move down already. Maybe they keep going lower, right? Maybe they pop and begin to grind down, right? Maybe this whole move today evaporates. Again, we have to be ready for anything right now with earnings coming out. Anytime I see these pop and grinders like this, it's always a pretty easy giveaway. I'm going to mark off that channel low. I'm going to bring it up around that high. And again, the most important factor on this is anytime we have a strong move in one direction, we're expecting a retest of that level. So look left, find some prior swings, wait for the pullback, get above those prior swings for traps, get above the moving average for some failures, right? And again, pullbacks will happen after we get back below the 21 EMA, right? Any of the entry patterns we find, we talk about in that free trading course. And again, right, the retest of the low is the objective, but if you want to fine tune the final kind of runner target, first leg down, right, third leg down, that'll be an easy objective as we go here. Again, I can't emphasize enough though, if we do go lower, we're still looking for that 1-2 back up here, right? If we do shoot lower here, they have to shoot it lower and then begin to either grind down or shoot it lower, pull back, and hold, right? A lot of bull momentum here right now. But again, I could easily see this thing rolling over here and heading back into that range where we came from to begin the week. Now the big question is, what do we do as the market rolls higher, right? First of all, can I sell off that high? Is it possible to sell off that high? We definitely can. Can I buy a breakout as we go higher here? Absolutely, we can buy a breakout. Let's talk about some of this stuff here as we go deeper into this video tonight. Let's go to the NASDAQ here. Now, on the NASDAQ, you'll notice right away the NASDAQ is quite different, right? The NASDAQ, the QQQs, the micro NASDAQ, again, a tick chart. So you'll notice the NASDAQ is a little bit leading the way right now. And as I mentioned before, the NASDAQ may act as a bit of a surrogate, if you will, being at a major level of support right now in the NASDAQ. The S&P might get a boost from that as well. So you do want to be aware of that potential for a shallow pullback. There are 4 key insights right now. There's probably a few more than that, but the 4 key insights here right now. One is the bull bias. Look at a 4-hour chart. It's pretty difficult to call this a bear market. Look at a 4-hour chart right now. So bull bias overall, the strong move lower. Right? That's a really strong move lower. Now, again, a lot of this is probably because of the earnings we heard. We heard from Alphabet, Google this afternoon. Who else is the tech name we heard about this afternoon? Well, tomorrow we hear from Meta. This might be a little bit of some profit taking off the top, just to kind of, CYA before tomorrow's opening bell tomorrow. It doesn't matter why. It's a very strong move down. Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that low. Now, once we get that retest, bam, now we can get a lot more aggressive, right, on that buy going up. Because, of course, you can see here right now, the third kind of key insight here is a range. There is a pretty obvious range there right in the middle. And then you'll notice the market has what I call rotation off the high. And you'll notice the amount we went above the range today is pretty much identical to the amount we go below the range. Now, you got to be careful on these, because even though this is a very good area to be a buyer, it's a very reliable spot, a support level for buyers right now. Ranges act like magnets, but you got to be very careful being too aggressive being a buyer here right now, because again, the strength of that move coming off the high, a lot of times these markets, they'll go up, they'll rotate off the high, and they'll never come back, right? That happens a lot more often than you think here. Now, again, we're still pretty bullish overall right now, but you got to protect yourself against those potential scenarios. And again, the kind of the fourth one here is there's a lot of support, right? I have an expanding triangle support. I have pendulum swing support. You could even say, right, I've got this hidden channel support, right? You can see how beautiful that channel lines up. It's tough to argue with all these levels, right? We've also got that prior high right there. That is a key area of support. So I'll tell you, the bears have a lot of momentum right now, but it's tough to want to be a seller right here, right now. So again, what is the most likely scenario right now? What is the most likely, historically speaking, statistically speaking, in my 15 years of watching charts like this, the most likely scenario right now is we trap in some of these bears and we make our run back up into that trading range, back to the high of the range, and then potentially back up to the big high overhead. Once we get to that high overhead, what happens most often is, because we're already so bullish, is we see a breakout, right, going higher here. Okay, so what if I'm wrong? What if, again, you'll be wrong quite a bit as a trader, right? Being wrong is kind of part of the territory, right? It's part of the business. If I'm wrong about my anticipation, obviously we trade whatever the market gives us. If I'm wrong, right, if they hold this pullback and start running us lower here, remember we got that range on the S&P. There's a range back here as well. They're going to probably want to go back into that range, I would imagine, right? Kind of where the market began the week yesterday. So, if we're wrong about that, that's where the bears will try to come in on this. They may also, too, hold the high, right? Let's say they do run back to the high here. They may be able to pull out a small miracle. I say small miracle because it's a lot of momentum coming off in an overall bull market. They may have that right there. They may have the ability to hold that high here. Got to be careful, right? Got to be careful. One of those crown reversal patterns that we talked about in last night's video. So I'm going to try my best right now not to repeat myself too much. We really want to think about, though, that same basic idea here. You want to use the 2-try rule, and there are kind of three ways to do it. One would be is if it really kind of shoots back up here, those traps will be your best friend. Right? So if the market, if we get like a V bottom off that low, which is definitely possible, there's a lot of support levels down here. I want to use the 2-try rule, right? Because the strength off the high here. The key though is I don't want to buy high, right? I don't want to buy high because again, like I mentioned in last night's video, if you buy too high right now, remember, there's a good chance this thing rolls over and tries to retest that low. Right? So worst case scenario, when you're buying off a trap, for example, right? If you're buying low off a trap and then all of a sudden more bears come in, you've already made your money in that trade, right? That's why I always say whenever you're going against one of those real strong moves like this, you want to get a trap low because it gets you in a relatively safe spot because as it goes higher, what's going to happen? Bears sell more, bears sell more, bears sell. Sellers, they want to sell high, right? And so that's the trick to getting in. And again, right, this may not be a huge, home run, buy a new sports car trade, but it's going to make you money, allow you to remove the risk, protect your capital, and if it rolls over, no harm done. So that's the way you want to trade that thing if it kind of V tops, right? If it kind of V tops. Or V bottoms. What you also want to think about here is if they can get the retest. The retest makes everything easier, right? It does because now they retest, they take out that low, it's mission accomplished, and then what I can do is I can rope in the weak hands, right? Kind of the smart money, so to speak, is selling high, right? They're smart. They want to sell high. They've learned that lesson. But there'll probably be some rookies down here that won't learn that lesson yet, right? They haven't paid their tuition to the markets. We all know what that tuition costs, right? Let them try a couple times and use their stops, right? Use their exits, right? Think about where their pain is. This is very similar we talked about, right, on the S&P, trapping them in, and then as we go higher, where does the market want to go? It's going to want to rotate back to the other side of that trading range. It's an overall bull bias. Now we can go out, find that new channel. And again, I'm keeping it simple right now to keep it short. But, again, 2-try failure after that retest. And then we're grabbing any of the entry patterns we can find that we talk about in that free trading course. And again, just like on the S&P, if they were to hold it and roll this thing over, I start thinking about finding those new bear channels, waiting for that pullback, and applying my entry setups off the high of it. If it was to pop and grind down, it's kind of even easier. It's even easier. Mark that low, mark that high, think about some prior swings, get up, trap in some of these buyers, and run it back down to retest that low. So it's, again, very, very similar here. We've talked about there on the S&P. Now, we go back to the highs here. What do we need to get short? It's a bull market, but lots of resistance, right? Lots of resistance. I don't care how much resistance is there. It's very bullish. If I want to be a buyer on this, right, or a seller on this, I need that crown reversal. I need buyers trying once. I need buyers trying twice. I need that trap high here. Why? Because you do not want to sell. You do not want to sell low. Right? If it's very strong going higher right now, what's going to happen? As it goes lower, the buyers are going to be buying into it, right? So if it rips higher here, you can be wrong about the reversal, but still make money. That's one of the beautiful parts about choosing your entries properly. You can be wrong about the big move, but still make money on the trade, right? Like that short on the S&P this morning. Right? You may not have got that big reversal off the high on that crown reversal this morning on the S&P, but it made you enough money on the way down. And by the time it ripped, you were already well in the green, right? So that's the trick to these kind of reversals, right? Now, be aware, right? Where the bears want to get to now is they want to go back down to the other side of that trading range, pick it up, right, and buy it back up, right? Those reversals back and forth using that range as a magnet. Let's talk about some breakouts. right? This, of course, can also apply to the S&P as well, right? So we do go back to retest the high. What would be some breakouts we could use here? The most common breakout in these situations right now is the pop and grind, right? Let's say, for example, right, we go back up, we trap in those bears, we run back up, and now for whatever reason, the market kind of floats, right? Starts to float, right? Again, a lot of news tomorrow morning. I don't know why it would do this, but again, you want to make sure you're ready for these different scenarios. Nobody knows what's going to happen tomorrow. If they tell you they know what's going to happen, they're either very naive and they'll eventually learn their lesson, or they're simply lying to you. We don't know what's going to happen. So if we get that V bottom or that trap off that low, we pop up and it starts to flutter going higher, that's a really easy one. We already have that bull bias already. Find that high, mark off that low, and then your job at that point now is go looking left, find some prior swings. That's where traps live. Get under the moving average. That's where failures live. Get back above the moving average. That's where pullbacks live. Remember, first leg, third leg. That'll give you an idea of where that final target is going to be. We've got a big range up there overhead, 11,920, 11,940 on the Nasdaq. Very similar, you can see here on the S&P. S&P has a ton of open space above us, and that range is just begging to get that breakout. Key levels overhead, 39.36, 39.25, right? Breakout, pop, and grind going higher, right? That's an easy one. One of the easiest patterns to learn in our trade room. The next one, of course, would be we take out that high, they pull back to the 21 moving average. The buyers don't struggle and fail with that crown reversal. They pull back and they blast. Now remember, I'm not talking about some double top, right? Not like this stuff. Okay, that's not going to work, right? That's basically a double top right there. Okay, you want to see this thing really jump, because you're going to remember, think of a trading range. Ranges are magnets. It's just like a space shuttle, right? NASA, SpaceX, whatever. They have to get that rocket booster to get out of the Earth's magnetic pull. It's the exact same thing that happens with a trading range. The good news is that as the market rotates off this low, it's got a hell of a lot of momentum behind it. And so, like I said before, the odds are pretty good it will get that breakout, but I never trust a breakout. We see a lot of times, we see very convincing breakouts, and all of a sudden, whoop, it's right back into that trading range. So mark that high, mark that low. You know the drill on this one, right? Get whichever, again, traps, failures, pullbacks, right? I want that first test. And again, you get a pretty good idea now for where the market wants to go. That big range overhead, first leg, third leg will be a good one as well. What other type of breakout can we get up here? It will be very unlikely for us to see this huge move overnight. You know what I mean? Anytime we see a big move, it's possible, but the range would be, well, if we see a big move higher overnight or a big move lower overnight, anytime we see a really big move overnight, the first thing I think of is don't chase it, right? Don't chase it. In this example, it's going to be too high to buy, right? It's too high to buy. And just like I mentioned earlier, how the buyers are kind of starving for a deep pullback, that's exactly what's going to happen here. If we see, and again, I'm obviously drawing this up right now, there'll be a gap in the chart, you know what I mean? The market will open up, right? There'll be some big gap up, you know what I mean? It'll be some big gap up. It'll be this huge rip higher, you know what I mean? It'll be pretty dramatic. The newspapers will be going wild about it, you know what I mean? Okay, at that point, you've got to be careful chasing these things going higher here. At this point now, you find a bigger channel, right? Find a bigger channel, draw backwards off the high, right? Off that low. And what you want to do is you want it, just like on the S&P, we want to try to get that deep pullback. And what I always tell my students is on the deep pullback, what happens is, and again, these are when you get these big moves overnight, on the deep pullback, right towards the end of the pullback, it starts to accelerate. And that acceleration is a lot of the buyers who got in early, they're getting knocked out of their long positions, and the market begins to accelerate. What happens is you get all the rookies who are chasing it, right? They're trading off of emotion, they're trading off of FOMO. The rookies get in too early. As it keeps on going lower, they're starting to get their stops hit. And that's what creates that kind of rush lower. That rush lower is very confusing because it makes it feel like, oh my goodness, maybe this is a reversal. It's probably not though. Right? Every once in a while it is. We saw one a few weeks ago. But normally, whenever we see a real strong pop in one direction, there's one thing on our mind, and that is getting a deep pullback, bigger channel, find that pullback underneath the moving average. And again, in my experience, once it begins to accelerate and that little voice in your head says, oh man, maybe this is a reversal. Bingo. That's usually when it's time to look for a bear trap, right? Trap in some of those bears. It will be a relatively strong move back, so you will want to use the 2-try rule, but that's exactly where you can trap in some of those bears. These, in my experience, are some of the easiest money-making trades. This can be a 10x, 15x trade in a matter of an hour. If you don't fall for the tricks that come along with those big moves. And now take that example and flip it, right? Flip it. If we were to go lower, right? We get, market opens up in Asia, it gaps way down, right? This could also go to the S&P too, right? It gaps way down, right? We find that bigger channel. We wait for that deeper pullback. We trap in the bears and back down, right? So if we start seeing big gaps, because again, it's an earnings day, right? It's an earnings week here, so be aware of the potential on that as well. I think we've covered all the bases now, right? We covered all the bases. I'm sure I've missed something. The markets love to throw curveballs, so tomorrow morning, 8 o'clock Eastern time, you know where I'll be. Hope I'll see you there with me. Wrapping things up here over on the crude oil. Oil has some very big names coming out later on this week. You probably saw earlier, right? We got ExxonMobil, we got Chevron. We do have one. Where was that one energy name I saw tomorrow? I can't recall where it is. You could easily say Boeing would be applicable to energy. It's not relevant right now. But anyways, big earnings names, big energy companies coming later on this week. And you probably have seen the drama. We have an election coming up in a few weeks here. Thank goodness, get the election out of the way. And they're kind of playing politics right now with the SPR, the Strategic Petroleum Reserve. So it's tough to nail down oil a bit right now because there's a lot of different moving pieces, and a lot of it is political in the short term. Basically, there are 3 key insights right now. Look at a 4-hour chart right now and try not to laugh. Try not to prick your finger on that 4-hour chart. A 4-hour chart, it's very difficult to have some sort of directional bias. If you've watched my videos the last few weeks, we had that big run up in early October, and I thought, oh crap, we're going back to 100. But then we had that big drop the last few weeks, demand dried up, yada, yada, yada. And so we're very mixed right now. There really isn't there really isn't an easy directional bias. If I had to guess right now, just based on charts, look at a 4-hour chart and you got that strong run up that we saw early October. But the oil market is it's not all technical. There's a lot of fundamentals that go into the oil market. So, technically speaking, we should be pretty bullish right now. But again, fundamentally, with the slowing down of the economy, the demand crush, we've seen again that creates a very mixed bag here right now. And again, with the election, that's not helping. It's a big weekly range. Right, this market is all coiled up here right now, and I'll tell you, we might see more of this. We might see more of this as we go into the first week of November, which begins next week. Right, next Tuesday is the first week of November. We have that election coming. The second Tuesday. Second Tuesday of November. So we might be going back and forth a little bit here on the crude oil. Anytime we have a trading range, what's the game plan? The game plan's really, really simple. Right, buy low, trap in the bears, sell high, trap in the bulls, buy low, trap in the bears. We're finding levels of support below to buy off support. We're finding levels of resistance above to sell off resistance. The range is the magnet, and you can see pretty easily, right? Pretty easily. It's very difficult to trust a breakout right now. Now, the buyers have a great shot, right? The buyers have a very strong recent run higher. And you could easily argue that we've seen a series of higher lows, higher highs. Again, a little bit more of a bullish technical clue right now. So the buyers, they definitely have a great shot on this. But again, it's difficult to take any breakout seriously until we can get out of this weekly trading range. So right now, what is most likely going to happen next? Kind of statistically speaking, what is the most highly probable scenario as we go? the most likely scenario is we go back down to that trading range low, right? We trap in some of these bears, 1, 2, right? Because again, it's a pretty big range. Momentum will be pretty strong as it goes. Wait for that move lower, trap them in once, twice, buy it back up. Wait for it going lower, let them try a couple times and buy it back up here. Same thing off of that low, right? So as we go lower, trapping in the bears. Again, that seems to be the most likely scenario here right now. That pendulum swing coming off of the high, you can see it gives a lot of support. I got that beautiful trend line coming up off of that low. So I think right now going lower, 1, 2, trapping in those bears and back up into that trading range. And if we're lucky on that, go lower, 1, 2, back up, find that new channel, right? And trade that rotation. So being a little more specific on that, right? Trapping in those bears, using our stops as fuel, no pun intended. And then, of course, traps, failures, pullbacks as we rotate back higher. You can see an example of that right here. This is a very slow time frame. On the faster time frame, it'll be easier to see. 1, 2, we pop up, right? Find that new channel, and you're grabbing that first pullback, right, as you go. What if I'm wrong, right? What if we're wrong here? If I'm wrong on that, it's a very strong move. If they do retest that high, now what do? Now we trap in the buyers, right? Give them once, give them twice, use those stops as fuel, going back down into that trading range. We've talked about these double top reversals, this case double top reversals a couple times already here this evening. That definitely is a viable setup if we don't get that rotation lower. And then what if we break out? Again, it's a very strong move higher. Doesn't seem very likely right now, but again, I don't know what's going to happen tomorrow, right? Neither does anybody else. So they do pull back and they blast. Now, again, I don't want any of this stuff, right? I don't care if they try to blast and I'll shoot 1, 2, back down again, right? Remember, do not trust those breakouts in a not just a daily range, a weekly range right now. But if they can hold that pullback and they can give me either, so really one of two scenarios, either we see a very strong blast up, right? Remember, it's going to be really strong because a strong move A strong move will want to be retested, right? So the strength of that is very important. Either we see a really big leg up right now, find that channel, drill down, find those traps, and buy that pullback. We're getting late in the video, so I won't go too much further into that detail on that, but that will be a good buy. Or what is usually more likely in these scenarios is they take out the high, and then they pull back to the moving average 21 EMA, and they jump from there, right? Oftentimes, the smaller channels, unless it's a really big gap up and a big move overnight, then you go bigger channel. But in most cases, though, it's those smaller channels, right, that work better, right? Makes sense? So chances are if it breaks out, it's that smaller channel, not that big one. You know what I'm saying? Right? So you be careful with being too broad of a stroke there on those channels. So a breakout's possible. It is possible. It's also possible for a pop and grind. Pop and grinds are easy, right? Find that high, find that low, and then retest that high there. Right? That's definitely possible as well. You can see, though, there's a lot of resistance up top here, right? So whatever breakout we get really needs to push, right? And don't be surprised here if we did get a breakout going higher. We got that retest, and then they take out those big highs up there, and then 1, 2, and back down into that range from there, right? That's, again, it's a weekly range there. If they can crack above 87.14, next big level overhead is 88 half there, 88.72, $90 a barrel. So we'll see here. But right now, though, again, tough to trust a breakout. We're buying low. We're selling high. We're using the 2-try rule to trap in the breakout traders, run some stops. That's the easiest way to make money until we see a really convincing breakout here on the crude oil. All right, guys. So game plan's ready. Game plan's ready. We planned our trades for tomorrow. Now the fun begins, right? Now we come back tomorrow morning and we trade our game plan together. The best place to come out and learn and trade along and do it with me is in my trade room. We open up every morning, 8 o'clock Eastern time. I'll put all the free course links. I'll put all the membership links you guys need, the description of the YouTube video. Grab that link. I would definitely recommend take the free course first. Learn the basic strategy, right? Start getting that going, and then I'll be ready for you when you're ready to make the jump into full-time trading in my trade room. The easiest way to get help, the easiest way to get more information, if you any help along the way, is to call or email or use our live chat. You could definitely drop questions in the comment section below. I admittedly don't get to those as quickly as I probably should. I get a pretty busy schedule these days. So if you want quick help, definitely call the office or use Skype or use email or use live chat. And again, I'll do my best to catch up on comments here tomorrow morning as well. All right, guys, hope you learned a bunch here tonight. Hope you use this strategy to earn a bunch tomorrow. Get a big day tomorrow. Hopefully I'll see you tomorrow morning at the opening bell, 8 o'clock Eastern time. If not, come back tomorrow night. We'll do it all again. We got some more big news. Don't forget, we got more big news coming on Thursday and Friday. So this week is just starting to rev its engines here right now. All right, guys, I'm out of here. Get some rest. Boy, the World Series doesn't begin till Friday. What are we going to do tonight? Get some rest. We'll see you guys tomorrow, 8 o'clock Eastern time. And by the way, who you got in the series? Who you got in the series? I know who I'm rooting for. Who you got? Let me know in the comment section below. I love the World Series. One of my favorite times of the year here. And we got Halloween starting on Monday. Great time to be alive. I'll see you guys tomorrow, though. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.